So mega cap tech, I guess you could throw Netflix in there as well, is on a roll. The FANG Plus names, they were all up last month. Some, like Apple, you might have heard about, Alphabet, Facebook, all new names, trading at all-time highs. The question is, Jason, if these stocks, for whatever reason, start to roll over, and there's no indication they will, it's not what I'm saying, but given that they're 40% of the NASDAQ 100, 4 or 5 stocks, can they continue to do pretty much all the heavy lifting?
Yeah, it's a good question, Sully. So obviously they've done a lot of the heavy lifting, and I think if I take a step back and look at where our focus was last week. Last week, the focus was on Jackson Hole. What does the Fed chairman have to say? Where are we going from here? Taper timeline, all that jazz. The market liked the comments. He seemed appear to be dovish there and continues to, stimulate and, continues to be accommodative, from a stimulus perspective. And when I look at big cap tech, obviously those names will benefit from ongoing stimulus, ongoing accommodative policy. And yes, I think if they do roll over, they represent, as you said, 40% of the NASDAQ 100. That could have an impact on the markets. But ultimately, this has been a year of rotation, back and forth from value and growth. And I think these names will continue to grow. I think any small dips, even in seasonality, and looking at this as the first day of September, I think the dips will be bought as we kind of head into the fourth quarter, here in the near term in the next 30 days.
Yeah, we're showing Stephen Weiss, big tech, Apple, Microsoft, Alphabet, still going to call it Google, you'll forgive me. And Google's been a name that you have loved forever. It's up 73% in 12 months. 73%. I don't think their business has gotten 73% better. I don't think online ad sales have gotten 73% better. They don't make much money from the rest of their businesses as well. Is there any thought in that big brain of yours, Weiss, you're thinking, you know what, let's sell it. Made a bunch of money, forget it.
Well, look, when you talk about what stocks have done, obviously you're talking directionally, and you're also talking relative. And let's just talk relative in terms of the business model. So you had the market, basically I'm talking the economic market, what people are doing, going more online. And guess what? Who's the leading advertiser online? Well, it's Google, and I still call them Google as well. And it's also Facebook. So their business has gotten tremendously better during the COVID. And a lot of those people aren't leaving. They're staying online. The businesses are growing online. I also accompany T-Tech, which benefits from that, the customer experience. So, look, as long as the business keeps getting better, Google is not an expensive stock relative to a lot of other higher-priced technology stocks. Not nearly as expensive as Amazon, which I also own. I think that's the place to be. And I would tell you that while Google's been a tremendous outperformer, some of the other larger cap stocks haven't. And your question was a good one. I think Jason answered it appropriately. But I'll just chime in. We've asked this question so many times over the last 5 years. If big cap tech doesn't perform, can the market perform? And the answer has been yes. And that's the answer in the aftermath of the question, seeing the facts as they've turned out. So, yes, could it be a momentary pause? Sure. But you've got plenty of other stocks like NVIDIA, et cetera, which I don't own, unfortunately, which have far outperformed those. So, yes, the market
But just
going.
A quick follow-up. You referenced at the top, you said T-Tech. Is that T-T-E-K? You're talking about Tetra Tech, or is that some company we've never heard of?
No. That's TTEC, which I've owned for a while.
Okay.
Chances are, if you're going online, if you're using AWS, for example, they handle the customer experience. What I mean by that is the whole backbone. So it could be the call centers. It could be consulting on your digital presence. It could be helping you design your digital presence. So it's one of those that are the backbone of the internet that you don't often hear about. It's a highly fragmented business, and this is the leading market share company in the business with take-or-pay contracts, with their average customer having a contract life and existence with the company, relationship with them, for over 10 years. So you've got this continued subscription model, so to speak, that just makes this a highly, highly qualified company, which I think at some point breaks the company into two parts or maybe even sells.